Today I want to talk about how Ken Griffin is selling off even more assets, a clear sign that he's struggling and is definitely going bankrupt. So stay tuned and let's make some money. But before I dive in with the key information, be sure to drop a like down below, subscribe to the channel and ding that notification bell. If you're currently sat on the sidelines and you haven't yet started investing, Moomoo will help you get started with 15 free shares worth up to a whopping total of $30,000. If you are already investing, the Moomoo platform is likely easier to use and offers more advanced tools for free than any other platform out there. And now I'm going to dive straight in with the key information. So, many of you might be saying, Tom, Ken Griffin has just bought a bunch of new properties in Miami, spending over $200 million. Just because he sold off one singular property, that does not mean he's going bankrupt. But now Ken Griffin has not just sold off one property, he sold off a second and has listed a bunch more properties for sale. I'm going to read through the articles, but it's clear that Ken Griffin is having a fire sale. He's selling these properties below their true market value and even below their listed value and below the purchase price just to get some cash through his doors. So on top of the first property at 14 Star Island Drive that he paid $24 million for, that was valued at $44 million, that he just sold for $18.5 million, Ken Griffin has now sold off a second property, selling off the first of 4 condos in his $54.5 million sell-off. So Ken Griffin has sold off one property and he's now just listed 4 more properties for sale, selling off another of those 4. Now those 4 condos have been listed for $54.5 million, but are actually worth significantly more. Ken Griffin is just having a fire sale. So Ken Griffin purchased this first condo back in 2014, but he's just sold it for $3 million less than he purchased it for. But not only did he sell it for $3 million less, selling it for only $10.2 million, where he purchased it for $13 million, he also sold it for 11% under his asking value. Remembering that this first condo was purchased back in 2014 for $13 million, that property should have been valued between $30 and $40 million, selling it for only $10 million. That's around a 75% discount to its true market value and a significant 30% discount to what he even purchased it for back 8 years ago. And not only has he taken a 75% discount off its true market value, he's also sold a second property significantly less than its market value as well, and he's also listed 3 more for sale. He's trying to desperately sell these 4 condos for $54.5 million, but these condos are likely actually worth around $200 million. Now on top of the property that was already worth $44 million, that's around $250 million worth of property that Ken Griffin is trying to bail on. Ken Griffin is trying to sell off around $250 million worth of property for only around $60 or $70 million. We've got $18.5 million for the first one and $54.5 for the remaining 4. Ken Griffin is typically a smart man that does not like losing money, and therefore somebody that was not desperate for cash would not be selling $250 million worth of property for only $60 or $70 million, a clear sign that Ken Griffin is desperate for cash and is going bankrupt as he's having a fire sale. It says Ken Griffin's sale of his longtime Chicago home in the Waldorf Astoria building closed Friday for $10.2 million, an 11% discount from the asking price when it hit the market with a flurry of the billionaire's other luxury condos in the city back in July. Now, Ken Griffin was also recently saying that he believes that meme stock losses are healthy for the economy. Now, I wonder if Ken Griffin believes that meme stock losses are healthy for the economy or for his pocket. And just a reminder, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 15 free shares worth $2,000 each, a whopping total of $30,000. Obviously, if meme stocks continue to decrease in value, Ken Griffin will be losing less and less money and potentially won't actually go bankrupt. And therefore he's practically begging retail investors to sell their shares at a cheap price to push the price of AMC and GameStop down further so that he doesn't go bankrupt. Ken Griffin is obviously desperate for retail investors to sell their AMC shares at low prices and hopefully not cause the squeeze, otherwise Ken Griffin and Citadel Securities will go bankrupt. He's effectively trying to manipulate us into selling by suggesting on the mainstream media that meme stock losses are healthy for the economy. But obviously meme stocks don't really impact the economy at all, as AMC is only a company worth $3 billion, a fractional tiny portion of the overall economic value. If a small $3 billion company can destroy a $50 trillion economy, then clearly there's something wrong with the system and not something wrong with the meme stocks. And as Pumpkin or Potato tweeted, he said, "I can't wait to see the lawsuits coming his way post-squeeze." And I think the reason why Ken Griffin is so desperate for people to sell off their meme stocks and why he's selling all of his property is because the entire $600 trillion derivatives market is beginning to unwind. Alistair said you can see the whole of the derivatives complex, we're talking about $600 trillion of over-the-counter derivatives, is beginning to unwind. And as that begins to unwind, there are going to be accidents along the way. The idea that somehow the problem the British pension funds have got themselves into is unique, forget it. This is a problem all over Europe and all over the US, where the repo market is far, far larger. Obviously, as the market continues crashing, not only does the stock market and the S&P 500 itself begin to unwind, but the derivatives industry as well unwinds faster. Now, obviously, Ken Griffin deals primarily in derivatives. He doesn't ever really purchase the actual underlying stock. He typically just purchases call and put options. Now, obviously, call and put options are forms of derivatives that make up this $600 trillion derivatives market that will end up crashing even faster than the underlying stock market. And that means that Ken Griffin will likely be one of the first large banks or one of the first market makers that ends up going bankrupt. But it seems that many of these major banks are actually already struggling. A JP Morgan trader said that nobody knows what to do right now, not a single person. Now this is actually really interesting. As Diamond tweeted, he said October 2008 was one of the biggest dumps in the stock market charts, and an article from 2008 that said a trader's view is that nobody knows what to do. This article was posted on October 16th, 2008, where this trader said that nobody had any idea what was going on. And that article is practically being reprinted word for word only a few days ago on October 14th, 2022, when a JP Morgan trader said that nobody knows what to do right now. Clearly the markets are shaping up to be very similar to what happened in 2008, and even these major banks are shaping up to have the exact same outcome as 2008 as well. But again, it's not just JP Morgan, as Credit Suisse is preparing to sell parts of the Swiss domestic bank as it attempts to close a capital hole of around 4.5 billion Swiss francs or 4.48 billion US dollars. Basically, the Swiss bank has lost $4.48 billion worth of assets, or has $4.48 billion worth more of liabilities than they have assets. Therefore, they desperately need to get cash in the door to continue running the business, or Credit Suisse itself will end up going bankrupt. And on top of that, as Zero Hedge tweeted, the Credit Suisse Investment Bank CEO is set to leave. And as Edward Burchuk tweeted, he said big banks are falling apart. Thank goodness. If the Credit Suisse CEO is set to leave and Credit Suisse itself is trying to sell off the investment banking portion of the company to raise this $4.48 billion, clearly Credit Suisse is struggling beyond repair. But again, it's not just Credit Suisse and it's not just JP Morgan Chase, as Goldman Sachs is planning a sweeping reorganization, combining their investment banking and trading divisions. So it seems that Goldman Sachs is also exploring selling off the investment banking portion of their company, or at least merging it with the trading side of the company to generate more cash to hope the business survives. As Darren Harper tweeted, he said, why are they reorganizing? Is something not right? Is something not working? Is something not going as well as it should be? And are they losing significant amounts of cash? I think it's clear to see that many of these major investment banks are struggling. Not just Credit Suisse, not just UBS, and not just Deutsche Bank, but also JP Morgan Chase and Goldman Sachs as well. And if 5 of these largest major banks are struggling, I can only imagine the problems that Ken Griffin and Citadel are having, considering they're significantly more over-leveraged than JP Morgan, Credit Suisse and UBS. We also haven't yet seen the CEOs of Credit Suisse, JP Morgan or Goldman Sachs desperately selling off their property portfolios, but that's exactly what we're seeing Ken Griffin doing right now. Ken Griffin is obviously struggling for cash if he's selling all of his property for even less than he brought it for a number of years ago, significantly less than the actual market value of the property. I also find it really interesting that Ken Griffin is resorting to selling off physical property. You'd think the first thing he should be selling off is intangible assets such as stocks or such as crypto. But the likelihood is that he's already sold off the majority of his long assets, he's already sold off the majority of his crypto position, and therefore the last two things he has left to sell off is either his physical property like his homes and also closing out of his short positions. Now he knows that if he closes out of these short positions, it will bankrupt Citadel, it will bankrupt himself, and it will likely expose all the crime he's been committing over the last 10, 20 or 30 years, and will likely earn him a one-way ticket to prison. Therefore, he's first trying to sell off his own physical homes, his own living quarters, and then to finally close out of those short positions if all else fails. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.